You don't have to ride out the waves as an investor, okay? Listen, I promise this applies to you. Listen to what I'm saying. You're going in stocks, you're going in mutual funds, you're going into insured products, you're going into these things that are pegged to the stock market. Stocks are not wealth, okay? All of these assets, look at retirement accounts, okay? I want to give you an example, and I promise if you listen to what I'm saying, you're going to look at finances completely different. You're going to go, oh my gosh, like, why didn't I think of this sooner or differently? A retirement account. You have to put your money away for 40 years. Think of every investment where there's fees for withdrawing early, okay? Take a retirement account, 40 years. In 40 years, do you understand how many economic recessions and cycles you're going to have to ride out? It's not necessary to lose money. So one, don't keep your money locked up in an asset where there's fees. Two, you want to, again, keep it liquid so that you can shift the money. I had an advisor message me the other day. He goes, my clients are really happy that we only lost 8% in the last recession. Why would you lose, period? You don't need to. See, smart money just shifts. Institutional money shifts. Do you think that these big banks and corporations are losing money? They're not losing money. They just invest differently. So when stocks start to go down and you see that shift happening, they get out and they move into hard assets that beat inflation, that hedge inflation, like silver and gold. And then when the market recovers, they go back in and they ride the wave. So it shifts, it migrates. And that's what you need to do. You need to migrate your money. But the best thing that you can do, and this is my not financial advice, as somebody who's not a financial advisor but makes a lot more money than they do, I would say that you shift your money when it makes sense. So we see silver, we see gold right now. Silver's popping. It's going to continue popping. Gold's $3,300 an ounce. All right. Institutional money is going into gold and silver. Large countries, Russia's buying $532 million of silver. Like, we're going into silver. You don't need to be an institutional investor to invest like an institutional investor. So you want to shift your money, let it migrate it. Okay. You move. Smart money moves. So be smart with your money. Move it. Stock market's tanking, all right? Before that, you'd want to see that economic shift coming, and you go into hard assets. And then you look for those opportunities in real estate and in oil and things like that. You don't need to lose. It's unnecessary to lose. So takeaways, don't lock your money up because it prevents you from being able to capitalize on market cycles. Two, you get wealthy by being able to capitalize on market cycles. Three, have liquidity so that you can shift like smart money does.